Let's get straight to the point. While crypto firms like Grayscale, Franklin Templeton, and Bitwise are already lining up for a potential XRP exchange-traded fund, or ETF, BlackRock, the world's largest asset manager, is still sitting on the sidelines. And today, we're going to break down exactly why, based on a detailed analysis shared by a well-known XRP researcher known as SMQKE. There are several layers to this, and we'll go through them one by one, starting with what many believe is the biggest reason: regulatory uncertainty. Yes, a U.S. court did rule that XRP is not a security when sold on exchanges, especially in programmatic sales. This was a huge win for Ripple and XRP holders. But here's the issue. While the judicial ruling from Judge Analisa Torres offered clarity in one specific context, the Securities and Exchange Commission, or SEC, has not officially classified XRP as a non-security. This leaves a gray area, and that's a problem for companies like BlackRock. According to SMQKE, this lack of regulatory finality is prompting cautious behavior among institutional players. In other words, it's not that BlackRock isn't interested in XRP. It's just that the rules still feel incomplete. And we can see this regulatory uncertainty in action. The SEC recently postponed decisions on XRP ETF applications filed by both Grayscale and 21 Shares. These delays have pushed potential outcomes as far ahead as June or October 2025. So, for BlackRock, jumping in right now might simply be too early. Now, let's talk about market infrastructure, specifically XRP futures. The CME, or Chicago Mercantile Exchange, just launched XRP futures on May 19th. On its first day, it saw $19 million in trading volume, which is a respectable start. But here's the thing. When BlackRock filed for its Bitcoin and Ethereum ETFs, both assets already had deep and highly liquid futures markets on CME. SMQKE pointed this out clearly, saying, institutional investors rely on well-established derivatives markets for hedging and risk management. Simply put, XRP needs more time to build up that kind of institutional-grade foundation. Even though XRP is among the top altcoins in terms of market depth, liquidity is still not quite there yet. And that matters a lot. SMQKE explained that stable and scalable liquidity is essential for handling large inflows and redemptions, especially in an ETF structure. The SEC watches this closely during the review process. So, BlackRock might be taking a wait-and-see approach, letting the market grow before it steps in with a new product offering. Now let's consider something many people overlook. BlackRock is already doing well with its current ETFs. Its iShares Bitcoin Trust has pulled in $46.6 billion in inflows since its launch. That's more than double the inflows seen by all other crypto asset managers combined. Its Ethereum ETF is also showing strong numbers, with $4.34 billion in inflows so far. So, from a business perspective, why rush? BlackRock has already planted its flag in crypto through these successful products. For now, the focus seems to be on growing what's working rather than experimenting with new assets that still face regulatory and market challenges. Finally, there's the strategy part. SMQKE suggests that BlackRock is not ignoring XRP, but instead waiting for the right moment. What does that mean? It means they're watching how the SEC handles the first round of XRP and Solana ETF applications. They're likely evaluating how the markets react, how liquidity evolves, and whether regulatory clarity actually improves before making their move. And this strategy makes sense. If you're BlackRock, with billions under management and a reputation to protect, you don't want to be first. You want to be right. To wrap this up, BlackRock is playing the long game. They're not saying no to XRP. They're saying not yet. Until the SEC offers clearer guidance, until XRP futures gain more traction, and until liquidity becomes strong enough to support a full-scale ETF, it seems BlackRock is comfortable observing from the sidelines. Meanwhile, other firms like Grayscale and 21 Shares are taking those first steps. Whether those steps succeed or run into regulatory roadblocks could shape what BlackRock and other major institutions do next. So, if you're waiting for a BlackRock-backed XRP ETF, patience is key. Because in the world of high finance, timing isn't just important, it's everything. Thanks for watching.